Let's do business now. Kenya's business and economic environment continues to deteriorate, with private sector activity worsening last month. The Purchasing Managers Index fell to 53.0 from 54.2 in July as new orders slowed and companies continued to shed jobs. This comes even as the quarterly data from the Kenya National Bureau of Statistics reported a steep rise in unemployment, with more than 1.5 million people losing their jobs between April and end of June this year.
5 months since Kenya reported its first case of COVID-19, the economy continues to bear the brunt of these shocks. Economic growth is expected to dip to record lows, while job losses are rampant. Piecemeal economic bailouts have not shielded the economy from the full impact of the pandemic. Business sentiments have worsened after the government closed the Kenyan airspace and restricted inter-county movement to curb the spread of the virus. The Stanbic Bank Purchasing Managers Index for the month of August worsened to 53 points from 54.2 in July after companies were hit with low orders or new orders at all. The survey shows companies were on a job-slashing spree after new orders dried up and consumer purchasing power weakened in the month. In the previous month of July, business activity was stoked by easing of movement restrictions that had been in place to curb the spread of COVID-19. Head of Africa Research at Stanbic Bank, Jibrani Quireshi, notes the employment subcomponent index still remains below the 50 level, largely reflecting firms scaling back on wage costs. Job losses continue to be widespread in the country, with 1.6 million people losing their jobs in the quarter between April and July, according to data from the Kenya National Bureau of Statistics. The annual inflation rate in Kenya stood at a 10-month low of 4.36% in August of 2020, unchanged from July of the same year. O'Brien came in for lunchtime business news.